this is Kanimozhi, Assistant Professor in Department of Commerce, Ratnam College of Arts and Science. Today we are here to discuss single entry system. So before moving on to the topic single entry system, you must know what is the basic principle in double entry concepts. So for the basic purpose of every business to prepare accounting is two. One is to know what is the profit of a business, and second one is to know what is the financial position of a business. Yes, let me move on to the topic double entry system. Double entry system means every business transaction the amount should be recorded in minimum of two accounts, and second one is the amount should be debit, and every corresponding debit there must be a credit. Okay, and the next one is example. Let's see what is the example for the debit and then the corresponding credit, and what is the basic principle. Yes, so here the company borrows 10,000 from a bank. So now the company's asset will get increases as cash increases. As cash increases, the liability of the company to pay back is also increases. So now as the asset increases, the cash has to be debited, and the liability is also increases, that has to be credited. So we here follow the principle, for every debit there is an equivalent credit, and then the concept the amount should be entered in minimum of two account. Here we entered in cash account and also in the bank account. Next we follow, that is principles of books. Double entry concept, it follows the ledger, that is personal, real account and also the nominal account. And then the accounting cycle under double entry system. The first initiate from a transaction. First the transaction will get recorded, and then it will be move on to the subsidiary books. That is, from the transaction you are going to prepare the subsidiary books. From the subsidiary books, that it will be posting on to the ledger. So the third cycle is the ledger posting. So from that ledger posting you will be preparing the trial balance. So from the trial balance, the final cycle is the final account. So from that final accounts, why we are preparing final accounts for the business is to know what is the profit of a business, and is also what is the financial position of a business. So thus the basic purpose of a business gets achieved. Okay, and the next one is, so for the transactions, see, we have two transactions. One is the cash transaction and one is non-cash transaction. So cash transaction, it is prepared in the books of cash book, and other transaction which is prepared in the books of subsidiary books. So totally we have 8 subsidiary books including cash book, and other 7 subsidiary books. These are next. We have a purchase book, purchase return, sales book, sales return, a bills payable book, bills receivable book, and then journal proper. Totally we have 8 including cash book. Now let's move on to the next one is double entry. As we know, we followed personal, real and also nominal. And then here the double entry system, it is very specialized. You need specialized skills to work on the particular account. And then it is very expensive, okay, as it requires skill, it is very expensive, and it also suitable only for the big business houses. Why it is for the big business? Why it is not for the small business? The thing is, small businesses, they cannot afford to invest in software so that they can work on it. So they cannot afford for the specialized skill labor, that is accountant, to work on it. So that the particular double entry system is not suitable for the small traders or new businesses, etc. Now, so okay, what kind of account system which is possible, which is suitable for the that is small business houses or the new businesses? Yes, next. Okay, now as I said, the single entry system is suitable only for the small business houses. Next. Single entry system, as in the double entry system we follow personal, real, nominal. In single entry system we used to follow the ledger account of personal and the cash account. Only these two will be followed, and that's why this is not suitable for the business, that is large business houses. The next. Okay, so let's see an example. For single entry system. For example, you are running a business of shoe orthotics. Okay, you receive a payment from the customer regarding the customizing the orthotics. So from this, you are going to keep the record in a computer program. That is, you are going to record it in the spreadsheet. to know what are the details will be available in that single entry. The thing is the list of item, that is the date, what is the description, what is the income, what is the tax, and then the payment notes, and what is the balance. So with that balance, you can, the businessman, that is the owner of a business, can able to know what is the balance on the end, okay, so that he can meet the new expenses. Next one. So that is what said here. When you have a balance, that is when you track the balances, you can able to know, or the businessman can able to meet the new expenses. So that is one of the benefit. And the next one is, you don't have any you don't need any specialized skills to work on this. You work on this simple tracking of your balances. So another benefit is you can easily track the balances, what is the balances, and also you can easily track what is the expenses and also the income which is earned from the particular transaction. And the next one is, we will see what is the merits and demerits. With this we will end. So what is the merits? The first thing is, it is very simple, as the simplicity, it is very simple to execute, very little need of effort you need to record the particular transaction. And the second one is the cost saving. Yes, you don't need to invest on software to execute the particular program. So here the cost effectiveness will be measured. And the next one is next. And the last one is the convenient. Okay, it is very convenient even for the small businessman to track his expenses and also his cash on availability. In the next, let's see what is the disadvantages. The major disadvantages, as I said, single entry system, when the accounts will be prepared on the basis of insufficient data or insufficient record. From that insufficient record, you will prepare the single entry system. So as it is a insufficient data, that is a major drawback for the single entry system. And second one is, as it is a insufficient data, you cannot prepare the profit and loss account for the particular business, balance sheet, and then income statement, cash flow statement, and also the equity statement. You cannot prepare all these. So that is why I already said this is not suitable for the large business houses. Next. And the last one is the tax problem. Even you cannot claim it as a evidence for the future purposes. As it is a insufficient data, you cannot claim it as a future references, and also there is a tax problem. You cannot help it in general with the bookkeeping. It is not acceptable for the tax authorities. As it is a insufficient, you cannot claim it as a tax authority. Thank you.